Right now, national headlines say that home sales just fell off a cliff again. But before you picture 2008 all over again, stay with me for a little while because in the next few minutes, I will talk about why fewer closings can coexist with record high prices and how Central Florida keeps dodging the worst pressures and the exact buyer seller moves that can protect your wealth right now. My name is Brent Danholm. I'm a real estate broker owner here in Central Florida. I own Maxim Realty Orlando and Maxim LLC in Southwest Florida. And my aim with this YouTube channel is to keep you informed about everything real estate here in the Sunshine State, specifically and mostly in Central Florida, so you can make informed decisions based on fact and not media fluff. So if you got the coffee ready, let's try to unpack the noise today. The big understanding right now is that reporters love that 5.9% drop in March sales. They love it because it sounds dramatic. They love it because it creates headlines. But a sales dip means one thing. It means that people paused, not necessarily that values collapsed, which they haven't done. So maybe you think of it as an upscale restaurant on a rainy night. Fewer tables are filled, but the entrees don't go on clearance sale just yet. Prices are still high. Food is still delicious. We're just not selling that much of it right now. And there are two what we could call invisible culprits that drive the pause. There's the mortgage rate shock. A lot of buyers still feel the sticker shock when they see 6.8% interest rate, because at some point in time, which is getting further in the past, but still close enough that we all remember when the interest rates were 3. And I still talk to a lot of buyers who I say, well, we're waiting for rates to come down again. That's the sticker shock. They don't want to buy at high interest rates. And then we have the what we call the golden handcuff loans. 70% of owners, they have locked in a mortgage rate that is less than 4%. So they're hanging tight. They're feeling pretty good about their mortgage rates. They don't really want to sell because that means they're going to get a new mortgage at a much higher rate than the one they have. So that means that fewer owners list, fewer buyers qualify, and there you have it, volume drops. But menu prices, they still stay in the premium range. So with that in mind, let's take a Central Florida reality check. We get rid of the national lens and let's go into our little 4-county backyard, which in my world is mostly Orange, Osceola, Seminole, and Lake counties. And we can include the villages just for fun, even though that actually covers a couple of counties outside of that median range. Medium price in our counties sit in the high 380s still for a single family home, and that's up about 4% year to date. So definitely not seeing any price drops yet. We are seeing individual homes being dropped. We're seeing individuals areas with a decline, but overall in our area, prices are still going up. Inventory in our area has climbed to about 8,600 listings, which is enough to give buyers more choice, and it's still pretty far from a balanced 6-month supply. So we're still mostly in a seller's market. Days on market are going up. On average, they hover around 76 days on the market. And what that means is that we're not in a frenzy mode anymore, but well-presented homes that are well-priced as well, they do go before you can have your second cup of coffee. So this is average, and this average days on the market is still lower than when it's high. So why is our market so resilient? Well, one of the few things that we can talk about is we still have a pretty good job market here. We have the sunshine, which is the reason a lot of people come here, whether they come to work, play, or retire. And we have lifestyle imports, we could call them, which are remote workers from high tax states that are happily live with our insurance premiums once they have their new backyard pool, because they can work from home and we don't have any state income tax, and they can get a house that's a lot cheaper than where they came from. So overall for them, they buy into the lifestyle here in Central Florida. There are 4 pressure points behind the slowdown. One is the mortgage squeeze, like I talked about before. Every single point that the mortgage rate jumps up, that adds about $250 to a $400,000 loan. So when the mortgage rates go up by a percentage or half a percentage, that is something that buyers, especially first-time home buyers, can feel. So they take a little gasp and they step back and regroup. And then there's the loan lock-in we talked about before. People hold on to their low interest mortgage rates like collectibles because they know they're not going to get that rate again. So it's going to take a long time for these people to sell. They will not sell until they absolutely have to, for whatever reason, because they need to move to a different type of home, or they need to move because of work, or whatever reason, but they're not going to give up a home with a 3.5% mortgage unless they absolutely have to. And then there's the cost creep, you could call it. The property taxes and insurance premiums keep going up. And that means the buyers are a little bit more hesitant to buy right now. So while prices stay stable and even go up, we're not seeing a huge amount of sales. And then there's also the fourth reason, the uncertainty because of the ongoing trade wars, tariffs, shifts in stock markets, bond market. The two political parties argue, and nothing. A lot of people feel nothing is happening. That actually that hurts buyer confidence and consumer confidence in general very much. So buyers, they hold back. So what's your game plan if you're buying? Well, first of all, set your expectations right, budget for today's rate, and then refinance tomorrow or whenever the rate drops. Like they say, date the rate, marry the house. And that is as true as it was ever, because you really right now you can get some pretty good deals, even though prices have gone up. But if you look at homes that have been on the market a while, you can definitely get some good deals, and you could always refinance when rates drop. Just make sure that you set your expectations right. Maybe shop new build. Builders also feel the squeeze. So many offer buy downs on your interest rate. They will throw in a pool. They will give you closing cost. All sorts of things you can get when you buy new construction. So make sure that you check out new construction, and I'll be more than happy to help that. Also, maybe have a little bit of cosmetic courage if you're buying resale homes. A dated kitchen scares a lot of buyers, but that the reward, if you're willing to take that on, is that you have less competition, and you actually have an instant equity if you do a facelift on that home. And it doesn't have to just be a kitchen; it could be a bathroom or flooring or anything. People buy everything with their eyes. So if you can move past that and see the possibilities in a home that looks a little bit tired, you can actually make a pretty good deal, and for often not too much money, refurbish that home and get some instant equity there. When you go out shopping, make sure you have a a solid pre-approval, because even though you're not in competition with others, but underwriters are getting pickier. So make sure you have your pre-approval in place so you don't get any surprises. You don't want to have signed a contract to buy a home, and then it turns out you can't get your loan after all. That annoys you. It's devastating if you need to walk away from a deal because of that. It's also annoying for the seller, but you don't really have to worry too much about that if you're on the buy side. But it is very devastating for a buyer to have to walk away if they can't get their loan. So make sure that you know that your lender has all the information they need to make sure that the approval you have is solid, so you don't have any surprises. So what should sellers do in this market? Well, you need to take a reality check and make sure that your prices is truly reality based. Look at very, very recent comps and make sure that you look at your competition online right now, your homes that are similar to yours on the market. Doesn't matter what a home sold for last year or even last month if the current competition is priced much lower than that. What you want to do if you're putting your home on the market now is you want to look at the competition around you. You want to look at recent sales, and then you want to price yourself towards the bottom of whatever those numbers show. Because the market right now, because of the few sales, really punishes greed. So there's no point in pricing your home 10, 15, 50,000 more than you expect to get and hope to negotiate to where you want to be. It's not happening, because if your home is overpriced, nobody's looking, nobody's offering. Also, home condition is really king. People buy with their eyes. So make sure you deep clean your home, put some fresh mulch out, make sure every light bulb is in there. You would be surprised how much it affects a buyer's opinion on a house if you turn on the light in the bathroom and there are 4 bulbs in the fixture and only 2 of them works. To most buyers, that screams lack of maintenance. Get as much information along with your listing as possible. Make sure that you have, I would even say, do a pre-sale home inspection in this market, so you can upload that and fix the things that you know is going to annoy buyers. So get the home pre-inspected. Make sure you are able to tell buyers what your insurance premiums are if they're relevant to new buyers. Anything you can do to remove buyer hesitation is perfect. Also, maybe offer, like builders, or consider offering some incentives. Maybe offer to help buy down the rate for a buyer for a $400,000 loan. It typically cost about $4,000 to buy down the rate by 1%. That's a lot cheaper than slashing $15,000 to $20,000 off the price. Make sure your home is staged well, and by that I don't necessarily mean you have to pay for staging. It just means that you need to stage with what you have, make the home look as inviting, and make sure that any buyer who walks in your home can imagine themselves living there. If there's room to set up a small office, a lot of people work from home right now. That means that you want to show them that there's a place they can do that. And if you have outdoor space, make sure that looks as inviting as possible. Mow the lawn, make sure that every flower bed is well maintained, new mulch, bushes are trimmed, front door painted, all that. If you do all this and price your home right, you're actually going to sell it pretty quick, even in this market. And you're going to get more money than you probably expected that you would. So let's take a little closer look at some areas in our in Orange County. The hottest zip code right now is 32828, Waterford Lakes Innovation Area. And that is fueled by tech commuters. So if you have a home under 500,000 that is market ready and priced right, you can actually expect multiple offers in that area. The hot zip code in Osceola County is 34746. A lot of short-term rental homes are selling there, and investors are looking for an 8% or more return on their investment. So that means you need to take that into consideration when you're pricing your home. The hot markets in Seminole County is Lake Mary and Oviedo because of the schools, and the average sales cycle in that area is actually only 30 days, even at $700,000 price range. So that's where you want to put your home on the market right now. In Lake County, Claremont Hills and Lakes Corridor is seeing a lot of new builds in the $460,000 range, and they're selling pretty well. The villages, I promised I would keep them in the loop. Inventory is up 11% year on year, giving if you're buying up there, it gives you some negotiation room for the first time since 2018. So it's a good time to be a buyer in the villages. So one of the things that people often ask me, and I can see a lot of people talk about, are the prices about to tank. I don't think that's very likely. Inventory in our area is way too tight for that, and job growth is way too strong for that. So what we can probably expect in Central Florida right now is sideways or modest gain in terms of prices, not really falling off the cliff scenario. Another thing I get a lot, should I wait for rates to drop, or simply, I will wait for rates to drop? Well, if you're doing that, that's because you love being in a bidding war. If you want to wait for rates to drop, that's because you really, really want to be one out of 40 or 50 offers on that home. Because lower rates, and they don't have to go much lower than they now, they invite a buyer stampede, and prices are being pushed up. What you really want to do is buy now and refinance later when the rates go down. And then you be one of those people with the golden handcuffs that don't want to move because you have locked in a low interest rate, but only after you bought when the rates were a little bit higher. People also ask, is it good to buy new construction? Definitely for insurance purposes. To insure a new construction home is a lot cheaper than insuring a second-hand home in most cases. And they also, even though you pay a little bit of a premium when you buy new construction, your price appreciation will be pretty much the same over time. And right now, because builders have so many incentives, you might not actually even be paying a premium when you add everything in. When you add in the closing costs they might want to pay for you, the rate buy down, and the new swimming pool they're giving you more or less for free. So new construction, definitely a contender if you're looking to buy right now. Just make sure you focus on the area must fit your lifestyle, and make sure you get the most incentives, because you can get a lot of incentives if you're working with a good realtor. So if you're even thinking about buying or selling in the next 12 months, let's get together and work out a custom game plan for pricing, payments, insurance, tax, everything, so you know exactly where you are. So send me a message or give me a call. My number is 407-288-0704. That's 407-288-0704. I can't remember my own phone number, so let's take it one more time. 407-288-0704. You can reach me almost any time. So if you want to talk about anything real estate related, and I always offer free consultation for anybody who wants to talk about what their options are. So if you what would you do if interest rates hit 5.5% tomorrow, or 5%? What would you buy? Would you sell? Would you stay where you are? Please drop a comment below. I read and respond to every single comment below. So let me know what you think. I hope you found this episode useful. If you did, please like it. That helps a lot. It helps the algorithm. It helps me to know that I'm doing something right. And if you want to know more about real estate in Central Florida, or anywhere in Florida for that matter, I can't say that. How about following the channel, subscribe to it, and maybe hit that little notification bell so you get notified every time I upload something. I hope you enjoyed this. I'm sorry my voice is not what it usually is, so I may have been a little more boring than usual, but I hope you stayed with me to the end. And if you did, thank you so much for watching. Until next time, bye for now.